Hello, and thank you for joining us for this session on branch banking. You can ask questions via the Q&A chat box on your screen during the session, and if you share your tweets via #BankingRevolution. And now I'll introduce Sopnendu Mohanty, Chief Fintech Officer at the Monetary Authority of Singapore. Sopnendu, thank you for joining us today.
Thank you. Thanks for having me.
So to really start with this, Singapore has been using some of the most cutting-edge technology and digital banking for a few years now. What's this done to the bank branch network across Singapore?
Well, this topic I'm talking about branch banking, Kimberly. It's a long time I've not spoken about branch banking, and it's almost I feel like after 7 years the topic is back for a discussion. So it truly reflects how branch banking has been a topic for many of us for the progress we have seen, because primarily banking has moved to a lot of digital uh, device driven banking through mobile phone, internet banking, and branch banking has pretty much being a story which is frozen in some years back. But given the topic is about branch banking and reimagining, I think Singapore we do see a significant footprint on the branch banking, because this is essential to have a branch network, because we are servicing a broad range of customers. There are certain customers who need branch banking. They need to go to a branch, especially the senior citizens, and they need a lot of handholding as they interact with the banking services. Further, I think there is a huge trust factor which comes with a physical presence. And a lot of banks do want to maintain a physical presence of their business to ensure that there's the brand equity remains protected, because brand still represents a certain brand value for the bank. And thirdly, I would say that there is still this, I will say, a stubborn cash requirement, which has to be has to be serviced and you need a branch to service those, or an ATM to service those cash type transactions. And so you have a quite a number of branch footprint in Singapore. So it's not an extent; it is still out there, and there are still customers who do visit branches. In fact, many a times I find queues in the branches. So I would stop saying this extent. It has to be reimagined definitely.
And over the last couple of years, as we've all been tackling the COVID-19 pandemic, and we've seen rules introduced like social distancing and the closure of shops on high streets, how has this impacted people's relationship with going to actual physical bank branches?
Very good question. Yes, indeed, a lot of consumer behavior, which were previously very physical interaction, they prefer to go to branches. Now they couldn't go because of the pandemic restrictions. And that restriction, in a way, pushed some of the behavior to a full digital behavior in terms of interacting for financial services with their banks. So we did see those shift. In fact, one data, if I can refer here, are e-payment transactions. Literally there was a hockey stick growth during the pandemic as people used more e-payments to pay each other for either for business purchases or paying each other. So that's one piece we saw. We also saw a lot of the traditional banking product sales and services were have migrated to more mobile banking and internet banking during pandemic. Definitely, that shift has happened during pandemic, which in a way was a forced one, and I would say not bad outcome, because I think the progress we want to see in this space of digital banking did catch up a lot during this pandemic, and which is not a bad thing to start with.
And you talked already earlier on around how you still see queues in front of actual physical bank branches, and there is still a need. But which sectors of society do you think that the bank branch network still serves, and do they have a necessary role to play? And maybe not even just through providing banking services, but just through maybe more of a having a physical contact point for people.
Well, I think that's where we have to reimagine the branch banking to the main topic we're talking here. and I used to run branch operations. So let me share with you some of uh, my own understanding of this space. If you look at a lot of the branches were a big cost center for banks, and in fact that was one of the driver which was leading to the shrinking footprint of the branch banking. And if you go and understand the what are the real cost driver for the branch banking, it was the cash and teller operations. And if you take out the teller and cash operation out of the branches, you are almost saving 60% of the branch real estate footprint, and also 60% people cost. So so when you want to think about branch in the current context, and you want to make a branch as an experiential center where you want to interact with consumer, help them to understand your product, maybe use this as a platform to teach a lot of financial services, uh, 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 I would say some kind of literacy around financial services to a lot of your customers. Teach them about cyber hygiene. Teach them about the new kind of products that banks are building in terms of consumer awareness, and make that center a more experiential, interactive centers. Definitely, that's how you should reimagine the branch banking today. And I don't believe that you need to have every branch should have a cash teller center, because that really is the biggest cost driver to these branches. And if you take it out, banks are perhaps 40% less cost than it used to be with the full scale branch with teller operations. So reimagine the branches to be more experiential, more customer engaging, more interactive. Find a way to connect with customers time to time. On top of that, you can still serve your traditional customer who still want to go to branch to do a cash transaction. There are many progress in the technology. There are automated teller machines which can be put on the branches, and they can perhaps serve the need for cash, but you don't need a huge real estate space to do it. So the combination of new technology and rethinking of how you want to interact on the physical space can be the way banks can think about reimagining the branch models and branch footprint.
And I think just to pick up on a point you were saying as well around how the usage of cash as well now, what are you seeing in Singapore in terms of how much physical cash is still being used, or has there really been a move towards now using digital payments or even just cards or other methods of non-physical cash payments?
So So physical cash payments, well, we are seeing a progress going down because we see the numbers. ATM withdrawals are going down. The branch cash withdrawals are going down. It will come to a point where it will be unsustainable in a way to even support a large cash distribution in a branch. So that footprint will come to a smaller demand. So sorry. So my sense is that the branches will still be there. The form factors will shrink. You will have a newer set of technology to serve that particular need. But the digital transformation of consumers will continue to progress. Will get more and more as time passes by. But that doesn't mean branch shouldn't exist. Branch can change themselves to serve a different need, which is perhaps more towards education, um, uh, interactive sessions with the customer to build a trust, build a brand. You know, Kimball, look, today branches do represent a certain trust on the financial institution, and I personally will be very scared to put money with a bank which I don't see any physical presence in a city. Well, it sounds very old fashioned, but I still believe they do give me some sense of comfort. There is a physical branch. I can walk into the branch and talk about if there's a need to talk about my issues.
And we've had a question come through as well, which I think really fits in with the theme of what we've just been talking about. And also just a reminder to anyone watching that you can submit any questions during this session. So, with digitization and the risk of disenfranchising the digitally left behind, is it time to reimagine the branch as both bank and digital educator?
Yes, absolutely. Yes, indeed. I think that should be the trend. And today, I think a lot of banks do announce, especially for high net worth client. They do believe there is a still need for a physical presence. Private banking, as many private bankings do have a physical interaction point. But also, these branches are a very can act as a contingency platform. If there's a system wide network breakdown, and there's a crisis, then you need a place to talk to customers. Customer can get into that physical space, and back, and they can be served. So there is a need to have that backup contingency uh, platform in form of branches if there is a need to have such in a crisis like a wide area disaster. So let's not rule out the role of a branch. It has a role. It has a role beyond providing services. It has a role to provide give a sense of trust, branding. It signifies the bank's own culture, values, and when you have people in the branches representing the branch, the bank, they do reflect those cultures as you interact with those customer with the other interact with the customers. So I think that's where we should think about the branch banking going forward.
Mhm. You talked about a few different points there, but are there any examples of how a bank network can really work well in tandem with a sophisticated digital banking environment? So, are there any banks in Singapore that maybe have created a really good joint process of having both that solid bank branch network and also having a really good online digital platform?
Yes, indeed. I think I don't know how to phrase this. It's called Fizzy digital models, where you have a part of the physical presence and part of the digital fulfillment happening. Sometimes you have those kind of business models where you initiate a request through a digital channel and you fulfill that request on a physical channel by meeting the bank's rep in a physical challenge in a physical channel. Uh, Many banks have digitized their branch itself. In fact, you can go to a lot of these branches. There are a lot of self-service digital tools available in the branches. So that kind of also provides an opportunity to digitally interact with the bank systems within the physical presence of a branch network. So this combination of a digital interaction with the physical fulfillment. In some case, you like to use the same tools within a branch in case you want to understand how to use this especially for emerging market where there is still a work in progress when it comes to digital transformation. You need that interim space where consumers can interact with the branch within the branch to understand how to use these digital tools. So that continues to be a viable channel for a lot of such interactions.
And how do you see branches being used in the future? Do you think that they'll just be used as a solely banking space? Or, I mean, we've got some examples we've seen in the UK where there's been more of a move into kind of presenting a bank branch as more of a, like a lifestyle space. Do you think that there will be more of an evolution in how people interact with their bank branch?
Yes, I mean, we do see in Singapore, we saw it in a lot of global banks are putting iconic places as the branch sites. I mean, the best example in my mind always has been Apple. It's a tech company which produces mobile phone and all devices, but it still makes an effort to go to the best space in the cities and open a fabulous branch, physical store where people go there and interact with the devices and understand the products, understand what the product can do. I think if you take the Apple model and see whether you can import into the banking world, yes, same thing can be done. You can actually build those experiential center and use that center to just interact with the customer time to time whenever they need to interact and provide the training ground for the products banks are creating and servicing the customer. So I think the Apple model is something I would say a good inspiration for banks to look at when they think about the branch network in future.
And maybe thinking a bit more broadly now around Singapore's approach to banking. And as I said, Singapore has always been very forward thinking in terms of how it allows banking to be done and excuse me, the steps that have been taken to really implement this across the country. So, what do you think will be the next step in digital banking? Now we've seen, the use of QR codes, digital wallets, etc. What do you think will come next?
Well, digital banking is a different topic, and I think we I see this in two frames. There are set of customers today who are still transiting to digital banking. They're still, and if you ask any bank and you tell me a percentage of customers who are fully digital in their interaction with the bank, I still it is in perhaps around 60%. That's the number they will quote. So there are still significant portion of customers who have not gone fully digital in their behavior. So there is this transition where banks are making effort to make the product as uh, digitally interesting, good experience, so that customers can use them more and more to interact with the bank. In terms of what is ahead for the banks in terms of digital transformation, I think definitely the banking products will perhaps be more and more sold through mobile phones. And if I can predict the future, maybe 5 years from now, this whole uh, uh, discussion around decentralized finance can completely change where you think about digital banking, because in the Web 3.0 construct, in the decentralized finance construct, the financial products are now going to get out of the traditional banking digital portals or mobile phone offering, and it will start operating in a space which is owned by the customer on a wallet which they control. So this transition to a decentralized finance model perhaps is a futuristic I'll say prediction of where this is going to ultimately land in the next decade or so. So that decentralized finance is a one big path way forward. The other two near term is extended finance and embedded finance. You will see more and more with the growth of all the API connectivity. You will see a lot of the non-financial entities partnering with the banks to come together to offer financial products as part of a complete suite of products within their respective portal, whether it's a health portal or e-commerce or it's a lifestyle portal, gaming company. There'll be a lot of integration happening at the end point of where consumers interact, play, and live by on the digital space. You'll also see a lot of embedded finance, where the finance will be moving away from the banking uh, devices to endpoint where the customers digitally interact more. So that's the second piece of future prediction of where the digital finance or where the digital banking or digital finance will end up in future. So a lot of extended finance, a lot of embedded finance, and hopefully someday we'll see a lot of decentralized finance.
Great. And we've had a question come through as well, which is, does having branches give incumbent banks an advantage for building trust, for example? Or is it a cost competitive disadvantage versus the new and digital banks?
There is this myth that if you are a fully digital bank, your cost of customer acquisition will be very low. It takes a lot of time to have a customer who will open an account with a digital bank and hold sufficient deposits so that it's a viable account. Banks have onboarded its customers over many years of relationship and trust, and they have sufficient amount of deposit to which banks can offer products and services. So a digital bank, just because they have no branches, doesn't mean that they'll be profitable because customers have an account with them. What is required for the digital bank to be profitable is the stickiness of the deposits, and that takes a long period of time, and it has to come through a lot of trust, a lot of relationship building between the bank and the customer. So I would not say that the cost advantage which digital bank will give them an immediate profitability, because the cost of acquiring a customer and building a sticky deposit base is a long way forward, and I think it requires a lot of investment and a lot of trust to be built to get there.
I'm mentioning the new and the digital banks as well. So Singapore did in the last year or two give out some digital banking only licenses. How has that been progressing, and has it been derailed at all by the pandemic in terms of setting up these banks?
I think it's not, I would say, not derailed by the pandemic, but I think definitely the progress has been quite well, I'd say. In fact, we're expecting next year a lot of these banks who have been given license to open up and to customers. But broadly speaking, during pandemic, we had 20 plus digital bank licenses issued in the Asian market alone, which clearly shows the Asian regulatory environment is definitely geared up to support these digital banks, the newer digital bank licensed construct, where they are looking to see an opportunity where this digital bank can serve the inclusion need of this market. So digital banks progress is rapid. The pandemic would have accelerated the progress, because with this changing customer behavior, I am sure any digital bank founder will be looking very quickly to get into the market and serve and this need, especially in a pandemic situation where there's a natural barrier to do anything other than digital banking. So I'm sure if at all it will be a rapid progress and a quicker deployment uh, of such digital bank into production uh, as early next year.
And as well, we've seen already like so much uptake of digital banking in Singapore, but still, there are people who may be resistant. What do you think will need to happen to maybe encourage these final outliers to move towards wanting to do more services digitally, even if it's not all of their banking, even if it's just payments, for example?
I think payments have moved. I would say payment has. I mean, today in Singapore, the you go around, people are used to this what called pay now. People are and when you talk to your plumber, when you talk to a small shopkeeper, they do say that we can accept money through pay now. So pay now itself has shown that it has really gone to the segment which traditionally registered cashless transactions. So payment, I would say, has gone to the end point where we want it to go, but there are still set of population who, because of other constraint, are still handling cash, which I think there's a natural, I would say, uh, percentage of people will always going to use cash. So I think we should not try to change it if it's not changing. But I think from a shift, it has happened. Now you're talking about other financial services, the banking products, the lending products, buying other financial product. Has it completely changed to digital? Yes, that's still a work in progress, and I think it all depends on the offering. If the digital banks offer very intuitive, smart product, good consumer experience, definitely people will shift to more digital banking, and I'm hoping the digital bank will do that and help to and that will definitely attract customers to be more using digital financial services more than what they used to do today.
Right, we've had another question come through as well, which is how will the future of payments evolve as we progress towards more extended and embedded finance?
The future of payment is already here. I think we are all living that future of payment as we speak. The use of QR code, the use of mobile payment, and more so now with this connecting payment rails between different countries. Singapore is leading in that space, connected to Thailand, connected to India, connecting to Malaysia. Next year, as we connect our payment rails, you will find electronic payment very pervasive in this sector, especially Asian market. And what will happen if you see, if you, let's say, in the decentralized finance world, it'll get more embedded in the front end. It'll get more embedded at different touch point. So you don't have payment almost becomes a second, is almost a process which happens inbuilt into your interaction. And one thing I always say that in the world of decentralized finance, two processes become one process. Today, when you are buying a house, you pay for the purchase of the house, and there's a contract exchange on the ownership of the house. What will happen in decentralized finance is both the ownership and the payment of for the particular purchase of the asset happens in a single transaction, and that is called transfer of value and transfer of ownership in a single transaction, and that is decentralized finance. I think that's the future of payment, uh, as we think, based on what we see the progress in this space.
Great. Thank you so much, Sopnendu. That's all we've got time for today, unfortunately. But thank you so much for such an insightful talk. And I hope everyone watching enjoyed your presentation today. So anyone watching can catch up at the session on demand on the website for the next 30 days. And next up, we have a panel on the rapid evolution of digital lending, moderated by Owen Walker, who is European banking correspondent at the Financial Times.